The market can be hard, and we all know that. And that's why the statistics states that over 90% of traders lose money. But I was just looking at this chart and I thought of making this quick video for you guys. How can wave analysis really help you in trading, and why is wave analysis the best approach so far to trade any market at all? I mean any market at all. Now, I am not talking about Elliott wave, okay? And if you watch my charts, you can't see anywhere I labeled A, B, C, D, W, X, Y, and all those things that may actually end up confusing you or make you want to be stiff to the rule and without being flexible. But I use pure wave analysis. And how can wave analysis help you, and why is it the most efficient way of approaching the market and trading the market that I have seen, and that has proven to be the best so far? I was looking at this chart and this thought just came to me, and I decided to share this thing. This is going to be, of course, a very quick video, won't last that long. So let's start with the concept of wave analysis. According to Dow theory, if you read it comprehensively and understand it, the market moves in 3 waves. This is an uptrend. This is a downtrend. So the market moves in 3 waves. So you have an impulse, you have a correction, you have an impulse. Likewise, on the downtrend, you have an impulse, you have correction, you have an impulse. Now, this is the basics of wave analysis, that the market moves in 3, and this already is a complete wave and a complete trend, because according to Dow theory, a trend is in play if the later impulse breaks the high of the previous impulse after this correction. And on a downtrend, it is if the later impulse breaks the low of the previous impulse. That is a trend. Now a trend has been confirmed. This now brings us to the question: will this trend continue, or will they reverse? This can only now be determined after we've gotten this and after we've gotten this. And this is highly dependent on where this is happening on the chart or in the market. That's how this can be determined, if it's going to continue or if it's going to reverse from here. Okay, so now that I have established this, which is just a shallow introduction or shallow overview of the whole wave analysis and the idea, let's us begin with the chart I am on now, which is German 30, and let me show you something. Again, before I go on, this thing here can have complexities in it, can be so complex when developing. Okay, but we'll come to that. I'll show you on the charts with actual candlesticks. And this one can also be fractal in nature, but this is the basics, and same goes to this as well. So now that I have talked about this, let's go to the charts. Let me show you. So this is German 30, and according to Dow theory, the market moves in 3 waves, primarily in 3 waves. So do we have a wave here? Yes, we do. Of course, you know we do. Do we have a wave here? Yes, we do. Of course we do. Do we have a wave here? Yes, we do. Of course we do. Now, how do you manage this fractal nature of the market to determine where the market will move next to and where it won't move next to? Now, That is where knowledge and experience in the market and on the chart comes into play. Now we had this impulse, we had the second wave, which is the correction, and then we had this. This wasn't really that much of fractal in nature, but this was, and you can see that. But then, of course, we know that this is a first impulse. How do we now determine if this is going to continue going down or not? Is that we need a confirmation, and this proved to be the confirmation too. After this confirmation, which looks similar like this, because this impulse wasn't really that sharp, so how do we determine that the market will continue? We still look for an impulse and a confirmation that the market will continue. Now this is a single wave, okay, and like I said earlier, it can be fractal in nature. Okay, now but we have that impulse, and it gives us a confirmation that this might be going down, which is this flag here, and then this actually went down. So now, joining everything together that has happened in the past, you still have the first impulse, the pullback, the second impulse. Now, how do we determine that after getting this second impulse, after joining this whole thing together to make a trend, complete trend? Now this was a trend, this is now a trend. Can this also be a trend? Now we will determine. So now, okay, let's take this here and assume we are back testing. Okay, so now that we have gotten one pullback and one, this is now a confirmed trend. So the question is, are we going to continue the trend or not? And we don't know yet if we're going to continue the trend or not until we see evidence that proves we are going to continue the trend or not. So now let's go forward. So from here, we saw this happen. It gave us an impulse, a little one, and a correction. And you say, okay, this seems to go up. You bought because this is already a complete trend. So we might just be getting either a reversal to the opposite direction or a correction, a pullback to continue the trend. So you entered your trade and you went, started going, or maybe you just avoided the market just to know if this trend will continue and you're waiting for it to break out of here so you can buy. So you just ignored this and it did all of this. And then here you can see that this was a pullback because this now came down, okay, and because it didn't break this low, you assume that okay, this has happened, this came to break the last lower high, but it didn't break the start of the impulse. Okay, so which means we are onto something more serious here. It's either this will go back up to break this top, and then we'll start reconsidering everything that has happened here, including everything that has happened here, or we are going to get something more complex because of this impulse that came down and did not break this thing. So when you saw this happen, it started looking very much more confusing. Okay, so what you need to do is you need to stay calm, stay out of the market, and watch what it does. So you see all of these moves, you see this, and then now this now looks like a double correction. Okay, so you're now getting a sense of what is happening, because you see this is a trend, this is already a trend, but everything is happening within this space. So you decide to allow it go. Now you see this, you see this, and you see this. So bringing things down to Elliott wave, where we have W, X, Y. So we have W. Let me clean it so you can understand. So we have W, we have X, and we have Y. Does this make sense to you? It should. Remember, we have a trend here. Now this has made a correction. Now can we continue this trend? That becomes a question, and that is where we take a look at the immediate moves we have after the big correction. So this is where we now take a critical look at this. You can see from here we have a trend, okay, and we've got a correction. So can this be the move that will come to break this low, or is it just going to come break this low and go back up? For now, we don't know, and honestly we do not know, okay, until we see confirmations that this is actually going to come break this low. We don't know. But with what has happened here, there is a higher probability that even if this comes here, breaks this, goes back up to break this top, we are most likely coming down to break this low again. And with everything that has happened here, that will give us an impulse, a correction, and an impulse, which is a complete trend. All this still looks corrective in nature because of the way the structure looks. And that's where you start getting more curious and asking more questions and relating your questions to what has happened in the past before we got all of these. Okay, so that's where you move to the back. Where were we coming from? You can see this impulse, you can see the pullback, you can see this impulse, you can see the pullback, you can see this impulse. Now you have this, you have this, you have this. From here, it's already a trend. From here, it's already a trend. But let's just leave that alone and say this, because of the factor nature of the market, this is an impulse. So you have a 1, you have a 2, you have a 3. Right? Now you can either say you have a 1, you have a 2, you have a 3. And within these 3, you still have a 1, you have a 2, you have a 3. But let's not even go there. Let's not even go there. From after this pullback, which came after the first impulse, you have a 1, you have a 2, you have a 3. From after this pullback, which happened after the impulse, you still have a 1, you have a 2, you have a 3. And if you don't want to take it like that, you can still take this to be a complete 1, 2, 3, leave it out on its own. 1, 2, 3, leave it out on its own, right? And then 1, 2, and what do you think will happen next? We don't know until we get here. But most likely, there is a higher chance that this may go this way. Now, do you understand anything? Okay. I believe you should have an understanding of a bit of the things I said here. So now let's go back to the immediate trade we have and see if we have a trade set up there. Let's go back. Now, this has formed a 1, a 2, a 3. This can go back to break this top and form what we call expanding flat and still come down and still even go down some more to break this low. It happens. But here is your immediate trade. We have this impulse. We have this correction. And if you watch my videos that of course I upload every day, you would see me analyze German 30, and I told you to expect this to come down some more and expect this move. Did it happen? Of course it did. Now what should you expect next? What I'm expecting next is that this will come down, at least to break this low. At least. Now will it continue after breaking the low? We will only determine that based on the information the charts brings, which is we'll have to break this low and we'll have to make a minor correction after breaking this low. It could come a little bit further before it makes the correction. It could just break this low slightly and make the correction backwards into here. It could also break this low here and make the correction to be something like this, making an impulse, which is what we call running flat. So the corrections can take any shape, but it is still a correction. They are still corrections. Doesn't matter the shape or the form they take. A correction is a correction. So now on German 30, what I am waiting for is for an impulse, a correction, and then I would sell. And I can even go down to the lower time frame, which is the 15 or even the 5, and wait for a break of this, a break of that, and another correction, a break of this and another correction to sell. Okay, now breaking of that and the correction might bring us to somewhere here. Okay, so I am looking for a break of this and a confirmation to sell. So therefore I am going to, in order not to confuse myself or be more aggressive than I should be, I will go back to the 15 minutes and wait for the 15 minutes move. So here I am waiting for a break of this. I'm waiting for a correction, and that becomes my trade. I hope you learned something from this, and every single day I bring you up-to-date market analysis on the moves to look out for, what to expect, what to do if a particular thing happens on an instrument you trade, what to expect next, what to do next, and what not to do, including the things to totally avoid. So if that sounds like what you want to see every single day, then you want to hit that subscribe button and smash the notification bell, because you are going to have this information or notification firsthand, London sections, every day as I try my best to bring you up to date market analysis. So with that being said, I wish you good luck in trading, and I hope you learned something from this short tutorial. Trade carefully and bye for now.